Well, what's going on? FOMC minutes has just been released, and they're blaming Trump on the slow progress of inflation coming down. Typical, huh? They're going to just blame the dude all the time. We're going to quickly dive into what has actually been released regarding the FOMC minutes itself. We're going to break into Bitcoin price action, given that we've just seen some wild, honestly, some unbelievable price action with cryptocurrency overall. So we're going to break all of that logic down, and I'm going to help you guys understand exactly what to expect going into the Asian session, especially after this FOMC minutes result. So if you are new, hit the like button, subscribe, and all those fun and games. Let's get with the program. So this is what they're saying. So it says here that they expected to slow pace of rate cuts after December meeting. So they're not going to be cutting interest rates as much. So that means interest rates are going to be higher for longer. Cool. All right then. So officials expected slower progress on inflation due to Trump's trade and immigration plans. Blaming Trump. It says here that almost all officials said upside risks to inflation had increased. Of course they have. You have the services PMI coming in as an expansionary reading, so a reading of 54.4, which tells you that everything is all good in the US economy itself. Now, with that being said, you got job openings coming in as a favorable reading, nearly 8 million. Then the ADP came in lower, and then the unemployment claims came in lower as well. So realistically, the only trigger for inflation, in my opinion, is the labor market, because as long as there's people working, then they're just going to be putting money to work. And manufacturers, companies who are then producing these items that people will consume will naturally increase the cost of their goods and push it onto the consumer. Welcome to economics. It's pretty simple as that. With that being said, going over into price action, Bitcoin today has been the king of whipsaws. Okay, just look at what's been going on the 1 hour time frame. You can see that we've had a stop run to the downside. They came back up again, but we are trading below a 5 and 13 EMA moving average. So if they do decide to continue higher, Bitcoin, and to continue the move higher, they're going to really need to break in towards this Asian session range right here, as you can see, and then just try and take the claim of the 800 EMA, which is this blue line right here. Now, with that being said, quickly going over into the daily time frame itself, because the daily time frames put things into perspective for us. We've had a sweep of the actual 50 EMA, which is this blue line right here. Now, price needs to retain itself within this range. Now, given that we've got a violet vector candle right here, the logic says that the next candlestick, in principle, should come up to try and recover that. But we won't know until this candlestick closes. We also won't know how Japan and in the Asian markets, how they're going to respond to the fact that the dollar dominance is still climbing up, and that they're blaming Trump's trade and immigration and what have you on having an impact on inflation, which naturally tells us that the dollar could continue its move to the upside. How is it that dollar going to the upside and Bitcoin is doing very well here? How's that going to help us? Well, what we need to see happening with Bitcoin, guys, is we need to make sure that Bitcoin stays within this 90,000 zone. If we go over to the order flow, there was an order down here around the 90K mark for about $45 million worth of Bitcoin. I can't find, there you go, just there. $45 million worth of Bitcoin to be purchased at the 90,200. So that's a lot of Bitcoin right now. And yesterday's live stream, we were talking about that 30 million at the 100,100. And they ended up taking that zone. So even though Bitcoin has made a nice sharp recovery back up, we go to the 4 hour time frame. You can see right there, we've got a red vector candle right here. They've literally swept the range down here, and they've left a little bit of this vector candle region. I think that the biggest support for Bitcoin would be between the 91 and the 90,000. But one thing you do need to take into consideration, if Bitcoin does continue with its move to the downside, anticipate that if you're looking to buy Bitcoin on spot, you do have this area here where the vector candles reside. So if I show you on the daily time frame, the first vector candles that are close by in this chart are in this range right here. And that's between the 80 and the 88 zone. And this is where people are all throwing out the idea that our Bitcoin's going to go down to 81, it's going to go to 79, it's going to go to 88. And it would be based on this imbalance in the chart. Now, if Bitcoin does lose the 50 EMA and spends a lot of time inside of this 50 EMA range, then what you're looking for is you're looking for every single candlestick after this candlestick to aim to close as high as it can. As long as Bitcoin can range out, then we are in a good position, because remember, Bitcoin, once it claimed its all-time high, it consolidated. Yeah, it moved down a little bit, but then it came straight back into the range and consolidated for the longest period of time closest to its all-time high. Now, if we put 2 and 2 together and put the idea that Bitcoin's going to make that trajectory move to the 110, 120,000 Bitcoin price, then what we need to see happening is that same story. We need to see Bitcoin consolidating sideways. It needs to stay within this 90,000 for us to be like, okay, this is a reasonable spot of support. However, if it does lose price and it does actually mark itself lower, anticipate stop runs to effectively try and bring Bitcoin back up, because this red vector candle right here and this violet vector candle right here is a point of interest that I expect Bitcoin to try and attack at some point. We just need to get rid of this FOMC impact and then any more data that's coming out this week, because if we just look at the calendar, data that's coming out tomorrow for the Thursday, there's nothing really that concerning for us. But on Friday, it is non-farm payrolls, and non-farm payrolls historically is a very volatile day for the marketplace. And now what we don't want to see is we don't want to see non-farm employment change coming in at a reading of 227,000, which is what they had last time. Now, if we do see the non-farm payrolls coming in higher, that's a problem. If we do see the average hourly earnings coming in higher, that's a problem. And if we see the unemployment rate going down, that's even worse, because then we are just solidifying the idea that inflation is here to stay. And the Fed will have to really do something about interest rates, which in my opinion, I think that if inflation is really going to start coming back up again, and they do get the data on the employment numbers showing that the workforce is still strong, there is two things they can do. They can either hold the interest rates for a longer period of time, and they can do what they did in the 1970s, where they can just flip it on its head and re-increase the interest rates. And they did that at the 5% mark. Right now we're at 4.5. So we're not too far away from it. Going into the Asian session tonight for you all, they too will react to what's going on with the FOMC itself. You can see Bitcoin right now is looking like it's going to start working itself lower. Everyone that sees this sort of candlestick to the downside, it is consistent with a stop run. So you've got to be very, what's going on here? You've got to be very careful with this sort of candlestick, because it does look like they've swept the liquidity, and now it looks like there's no interest down here. There is interest down there. There are imbalances. Even if you just go and have a look at exo charts, you can see here that you've got traders that are just stuck in the book. There's imbalances that, and they're going to want to visit those zones at some point. Does it mean that Bitcoin is going to continue to go down lower? Well, it all depends on if it can actually sustain itself. Right now, the trend looks like it's going lower. There's no deviations. There's no reversions back into the mean, and price seems to be respecting this 5 and 13 EMA as a rule of thumb by the principle of the hybrid system. So if you haven't got access to that, go to the Traders Reality website and take this free course, because it will show you everything other than a dark screen. It will show you everything about the hybrid system that you need to know so that you can apply that in your everyday trading. Now, with that being said, go back into it. As long as price stays below the 5 and 13 EMA, then the trend is to the downside. However, if you start seeing the 5 and 13 EMA starting to cross upwards and price gets above the 5 and 13 EMA, which is this red line and this yellow line, be mindful, because a true trend change by the logic of the EMAs is if the 5 and 13 EMA cross over the 50 EMA on the 1 hour time frame. So just take that into consideration when you are trading Bitcoin, okay? But what it looks like now, looks like it's going to start working itself down. With that being said, ladies and gentlemen, I hope that's helped you. I hope you got enough information right there. Going into Asia tonight, they too will react to the idea that the Federal Reserve is blaming Trump for their slow progress on inflation. So investors in Japan are going to then think to themselves, so what can we do? Are we going to go over to the yen? Are we going to go into a safe haven over there? Are we going to go over to gold? What are we going to need to do? So we won't know until we actually do see Asia open tonight, but you can see the dollar dominance is trading pretty strongly, and it's now starting to have an impact on Bitcoin. With that being said, guys, I'll be checking in with you all tomorrow morning for the New York live stream. Mad love and respect. Peace.